Yo, what's up you guys? Welcome back to another video. Today we're going to talk about a simple yet effective day trading strategy that you can use whether you're a beginner or an expert trader in the market. Now without any further ado, let's get straight into it. And please make sure that you do watch the video till the end, because there is some juicy content coming right towards the end for you as well. Now obviously there's two parts that we are going to look at. Every day when you wake up and you feel like you need to take a trade, what you're going to do is, the first thing you want to do is go to baby pips. Okay, so step one, baby pips, baby pips check market milk. Right now, that is already step one. Okay, we're going to say that's step one. Once you get to market milk over here, you want to come and check which currency is the strongest and which one is the weakest. Now you can select more than one, but for the case for this video, we're going to use Euro JPY. You can see here the Japan yen is the strongest and the euro is the weakest. This is giving us an indication that we can expect the bearish outlook for Euro JPY. Now let's go and have a look at Euro JPY. Before we do that, let me copy that and then we can go to Euro JPY. I'm expecting some bearish move here. Beautiful. We can see that the market has been bearish for today. Now step one, basically identify the currency pair that you want to trade. In this case, we're going to look at Japan yen and the euro. You can go USD as well as CAD and GBP as well. But again, for this case, we're just going to use the euro and the Japan yen. If you scroll down to the top losers, you can see here Euro JPY, USD JPY, CAD JPY. Most currency pairs trading against Japan yen has been quite weak as well. So as you develop this method of day trading, you can potentially start looking at other currencies that are doing weak also against the stronger currencies. But for now, I would suggest you focus on one currency pair every day. You come and check here and see which ones are doing bad, and you take a trading opportunity based off that. Now we've got step one, right? Now we're going to say step two, identify weakest currency, let's say currency, and strongest currency, right? So we're going to identify those two things first, which is what we got over here, right? The strongest currency and the weakest currency. Now we know in a situation like this, we are looking to sell Euro JPY. Now this, remember, this sell that we would have probably looked for had probably already taken place, because we should have done this. You are going to do this tomorrow morning for yourself. I'm doing this now after it had happened, right? But in any case, so now what we have is you're basically now looking for an entry in the market. Now, as most of you know, like I always say, there's many ways that you can find yourself looking for an opportunity in the market. Now, if you've watched most of my market breakdowns, you'd have probably seen I'm talking about an impulse correction and impulse pattern. I'm talking about a head and shoulders pattern. I'm talking about what else do we have there? We've got that information pattern as well. These are all considered bearish patterns, right? And then, impulse correction, impulse to the downside. These are all bearish patterns from a technical perspective. I'm just going to remove this. Now, when you come on to the currency pair that you're going to trade, you want to identify market structure, right? So the first thing you want to do is identify the market structure. I'm going to go number 3 over here. Okay, let me delete that. There we go. Identify the market structure. Now, what do I mean by that? Now, the easiest way to understand that is, you know that the market moves in waves, right? So you know that you're looking for a sell, right? So I'm just going to draw the structures that we do have lined up here, depending on where you would have potentially gotten into this market. Now, the first thing that we can see over here is that we had support, got broken, it became resistance, the market came for the retest and then started to move to the downside. We also have a head and shoulders pattern over here, as you can see. So this would have been a good place to get into the market as well. We now have another opportunity to get into the market, provided that the data remains the same. Now, you understand the concept, right? The first thing you want to do is check market milk, which currencies are doing well and which ones are doing very bad. Now, in a situation like this, if you had to, let's assume you had to enter this market, right? Let's say you came to the market and the market was trading at this level. Let me just remove this. I could get 70%. The date today is the 27th. Let's assume that you woken up and the market was sitting at that level, right? Because that was today's data. Now, once you woke up, it's like, okay, the market's at that level. You check market milk and you go, oh my God, the Japan yen is actually doing very well and the euro is actually very weak. So there's a high possibility that we can see this market move to the downside. Now, what you would have done was you would have probably gotten into that market. Why? Because we apply simple, basic price action concepts. Nothing fancy about what we do. We need to just understand the overall bias from a technical perspective. You don't need to draw 20 trend lines that look like this, to wear shoes that look like this, or you don't have to be the guy who stands on his car to know. These are simple basics. As long as you understand from a factual perspective, from a factual point of view, you know the market is supposed to go down because according to the currency strength meter, it's telling us the Japan yen is the strongest and the euro is the weakest. But he said so. He said that no. We go off factual information. The facts is the Japan yen is strong, the euro is the weakest. Now we apply simple price action concepts. This would have been your take profit because remember, we always target the low, right? We target the low. Here, you would have placed a sell limit order and you would have waited for the market to fall in. Stop loss will always go above the high because why? Your stop loss needs to be protected by structure. And this is basically how you would have approached the situation on the trade. Now, if you're looking for bullish move right now, I can't show you a bullish move here because the data is not in a bullish, because we're not looking at it at an inverse. But for bullish, you would look for patterns like an impulse, a break, a structure to the upside. You would look for an inverted head and shoulders pattern, or you would look for a W formation to the neckline. As long as you know which way the market's supposed to go. Let's see if we can maybe use this example. Let's go to AUD USD. Yeah, let's go to AUD USD. Let's see if we could get in there as well. Okay, so with AUD USD, we can obviously see that AUD USD, while doing this, has been very bullish, right? Now, let's assume we woke up here, the 27th. I said yeah, also going to say yeah at 4, somewhere around there, right? Let's assume that you've maybe woken up at 4 there. Now, there's obviously two ways that you could have gotten into the market. Now, again, price action is fairly simple. Here, we're looking for buys. Why? Because AUD is stronger than USD. So the AUD is supposed to go up because it's supposed to be stronger than the USD. Now, you could have probably got into this market at this level. Why? Because it's an impulse, correction, break a structure, a retest, and a continuation. Take profit would have probably been there. I know it's very short, but you could have probably squeezed a little more than that, right? But let's say because this is basically where the market, if you got in there at 4 a.m., you're probably able to get that right up there as well. But alternatively, you could have probably gotten in here somewhere as well. Lower time frames scale in, like we're going to scale in. But the moral of the story is that whenever you look at this data, it will give you the overall direction for the market for that given day. That allows you to use simple price action techniques like the ones that I show you now. Identify certain patterns or just use simple. So yeah, guys, no man. No. You can't. Do you see there? Break a structure. Yeah, we've got break structures, right? Here we have, if you go left here, there. We've got a breaker structure there as well. You identify these patterns. If you want to day trade, go try this stuff. It works. Now you're gonna go pay someone 12, 13,000 to show you what I'm showing you for free. But you might not see the value in this because I don't charge you for it. But you will probably see the value if someone charges you for this. This is a very easy way that will work for you if you want to look at the market. Heel dag, as I will sit. If you want to sit at your PC holder, you can sit there all day and trade like this. It works. Thank you for your time. It's load shedding. And as always, cheers for years.